All right, good evening, guys. Kenneth Tortoise Capital Nightly Strategy Podcast for December 16th, 2022. We're going to start with the sniper trade of the day. So, as usual, we'll do this one on a 3-minute chart. We have one of our sniper targets. It was poised to make an abnormally large move in either direction in a shorter period of time. In fact, it was in a compound critical state, meaning that it's from a small risk box, it's ready to make a large move in either direction in a short period of time so that we can capitalize by following price whichever way it goes. The usual stuff. Right, so this was yesterday's close, and it opened here, sold off a little bit, and then went all the way up to close here. So that blue box represents your OR3. Now, this is one of those where when I draw my standard risk box, you just kick yourself by saying, hey, if you just had bracketed the open and it opened here, could have entered here with an MMRB off the bottom. Yeah, and that would have been a 1, 2. You'd have 3R in hand by the time you make an entry. That's very true. Well, isn't the easy move over? Well, maybe not, because we remember that the R10, when you use that as the minimum manageable risk box, it's really 1/10 of a range stat. So if that's the low of the day, you can get a range stat, and if you divided that into 10 equal segments, 1/10 of the range stat is equal to the minimum manageable risk box. And the range stat is defined as the maximum reasonable intraday move. The maximum reasonable intraday move. So what that means is a move off the bottom that moves a range stat away. You're not allowed to be surprised by that. If it goes beyond a range stat, now you're into the land of irrational exuberance. But everything from the low of the day to the range stat is a reasonable move. Why? Based on statistics. Statistics tells you that a move of that magnitude is the limit of normal behavior. And so when we pick 1/10 of that as our R10, now I can put this move into context. It has moved a total of 1, 2, 3, 4 off of the bottom. So that means I'm only 40% of my way up the stack. So that means that if I buy it there with 1 unit of risk, I still have, if that's 40%, I still have 60% of a range stat to go, meaning that I potentially have a 6-to-1 favorable upside if this thing continues to move all the way up to the range stat. So the reason that I don't mind buying this one right here is because the kind of behavior that makes it move from here to here, 40% of a range stat in 3 minutes, makes it a candidate for the kind of symbol that could also move another 6 boxes up to a range stat and perhaps beyond. the very fact of its extraordinary volatility tells me that this just might be a volatile day. So I don't worry about, hey, did I get in too late? No. I know what the upper reasonable limit of this thing is. It's based on the range stat. Well, how do you compute that, Ken? Math. That's how. You take the ranges of the last 30 days, high minus low. Then you find the average of the last 30 days of ranges. And then you add one standard deviation of those ranges. And then that equals, so average range of the last 30 days plus one standard deviation equals the range stat. Sometimes we call that the R stat. Okay? So that's why I don't mind taking that entry right here, even though in retrospect I'm entitled to say, darn it, I sure wish I had taken that earlier move, but then my life is filled with unfulfilled wishes. I've become accustomed to that, right? If you're an adult, so have you. So I take the entry at the entry on a breakout of the original 3-minute bar. I draw my standard risk box, and up we go. Check or hold. So let's see what we get. An instantaneous fail. After all that build-up, that's what we got. Okay. Well, that happens. In fact, that just happened. So we get the 1 hour loss. Now, because this thing just went up like a scalded ape, I'm ready for it to revert back to the open, so I just stop and reverse. Stop and reverse. There's my my minimum manageable risk box, check or hold. Is it possible for this to go all the way back to the opening? Yeah, it was just there 3 minutes ago. And you can tell by inspection that's better than 2 to 1, so maybe it's going to go. Oh, it does. How about that? Am I allowed to be surprised by this behavior? No, this is perfectly normal and rational. So there was my first risk box. It didn't work. It reverses, so I get my entry here. Here's my risk box. So now within 1, 2, 3 bars, it comes all the way down here to the edge of the dragon. I have approximately 1, 2, 3R in hand on this trade. So this one's +3. This one is -1. It comes down, touches the PSAR, and starts to reverse back up. Do you think I'm ready to take that for a 3R win? That would be a quiz. Is that worth taking a 3R win? Yes, it is. So we're at +2 for the day so far. This looks like Mr. Toad's Wild Ride. This symbol is in play today. Honest to goodness. So now, right after I sell it, or cover it, I suppose I should say, it reverses and continues to go straight back up, comes through the dragon. There's the belly of my RL10. So it crosses the dragon, That's a COTA 2 entry. And it'll be interesting if it can get above this price level, which is a new high of the day. It's already ready to breach the peak of the R10. So this thing is already right on the borderline of interesting. Check or hold. So what I got to do is at some point get my risk out of here so that my entry here, if I can get my stop from here up to here, then I will have locked in that little wedge of no lose plus dinner for two. Okay. Oh, that's good. By this time, my stopwatch is here, and I'm noticing really after that little compression and this bar makes a big move up, in the energy, there's a certain amount of buying energy that's pushing that up. While that's happening, I got to take that opportunity to raise my stop to here. And now what I can do is, if I do that, then I just locked in that much gain on that much risk. So just get your stop to there. Check or hold. And now it's a science project. You could ask yourself where would you want to put, you could, as long as you were here at like the belly of the dragon, you would have locked in that gain. There's the spine, there's the top of the dragon, and which is also a 2-bar low. There's a 1-bar low. So where would you put your stop? 1, 2, 3, or 4? Where would you put your stop? Realizing that this thing opened here, went all the way up to the peak, and now has sold off all the way to here. 1, 2, 3, or 4. Yeah, I think you got to either be there or there because you've already given back that much. And this thing has shown a willingness to make sharp reversals. I agree. So, and either one of those 3 or 4 would have been fine. I ended up just accepting whatever the PSAR would give me. So 1 unit of risk, 1, 2. That's another 2 units of reward. And because of this thing's propensity to fail and be volatile, I noticed that it's got all of this going on. PSAR flip, R10 wiggle coming through the drag. I'm ready to take that as a PSAR flip, supported fall crossing, standard risk box, checker hold. By this time, your stop, which was here, by the time this thing has moved all the way down to here and is starting to turn, to me, your stop's either got to be here or even here, because this one would allow you to lock in that wedge. This one would allow you to lock in that wedge. This one would allow you to lock in that wedge. So where would you put your stop? 1, 2, or 3. Remember, price is here. You could even go there for 4 if you want. The main point being that as long as you've at least locked in this wedge, you're not losing any money. All right. So I've seen a couple votes for 4 and a couple votes for 3. Three and 4 would have already been hit. I ended up taking 3, which was the PSAR flip. At some point, we're just going to remember that the PSAR is your friend and that the RL10 is price, and that's where you make your decisions at. Nothing wrong with that. Sometimes you have to, you have to suffer with these long tails, but price and the PSAR flip. So this thing has been so volatile, I'm ready to take a standard risk box. And what would we call this entry? You got a higher lows. You got a crossing of the dragon. Caught it 2. We would call that one a scratch. Yeah, we would call that one a scratch. I considered re-entering that one right away. I elected not to. It was getting towards lunch. I considered picking that one, but I was already of a mind that this was so close to the turning point, and we'd already had a really strong run. And there was a moment in here that when this turned, I fully expected this thing to go, and it didn't. So I was reluctant to go right back on, and now I felt like it was running out of room. I was ready to get in this thing if it went above this, but neither one of those really turned me on, and I did not have the will. But you can see if you had taken the first position right away with a risk box like that, you should not lose money on the first trade, but I did not have the will to take it. The second one. I did not have the will to take that one. By this time, where it's testing this, if you had taken either one of those entries, your stop should be right about here, and both of those would have been in the money. And then if this fails, you made a little piece. What's wrong with that? Nothing. On the rollover and breakdown, I did have the will for this one because this was the picture that I had in my mind that this could act as resistance, and then I was ready now for the PSAR flip and the supported fall crossing, checker hold. Orderly exit when the RL10 comes to the PSAR. So that is 1 unit of risk, maybe 0.5 of reward. This now feels like it could be setting up for a Kata 2 because we have that higher low. And my idea is that I should be able at least to get to this price level because it's gotten there twice. And if I can get this, there's 2 to 1 there. So that's not a impossible stop and reverse right there. And this one, I actually ended up taking that one because it failed to fail further. You know, this is the place where you would expect it to fail because it would have broken through, but it never broke through there, and it had 10 or 15 bars of support, and it's slowly grinding north. It's like, all right, we'll give it a try. Let's go. So to me, by this time, you know, your stop, which is here, and in reality, you probably had an execution stop right here. So if this thing had failed through here, you'd want to get out right there. You don't mind getting out right there instead of waiting for a full 1 hour loss. But it didn't fail, and now this thing has moved far enough up out of the yellow zone. You know, you can say, hey, there's 1, 2, 3. By that time, I should be able to take my stop and at least get here, and then maybe just do that and follow the PSAR. And then, if that's your exit strategy, then you've locked in that wedge, and it's only going to get better. Check or hold. Now, by this time, what I've got is the R10 rolling over, crossing the baby dragon, sharp penetrating price action all the way down to the PSAR. That was enough. When I looked at those, I was content to lock in those little pieces here. And the R10 really was just kind of drifting along, but then I got a nice move up, which gave me a nice big chunk. And now it all started to fail here. That felt like enough. And by this time, 1 unit of reward, 1 unit of risk. I was locking in 1R. So I don't mind taking that one at all. Check or hold. And that was the move for the day. It was also coming into closing time. Right? So this was U.S. Steel. This is a steel company, for crying out loud. Trades like a internet demon. So -1, +3, +2, 0.5, scratch, 0.5, +1. So 5 minus 1 is 4, plus 1 is 5, plus 1 is 6. 6R. Bank. All right, here's the 30-minute chart into the dailies now. This was today's move in the S&P. Yesterday's big sell-off. Today just continued to sell. Closed here at 383. So as soon as it broke below yesterday's low, that was a sign you could play the short side in the broad market. We made a new 10-day low here. This is our 5-day look. Here's our 10-day look. Notice that the size of the volatility of the 5-day from high to low. That's also the 10-day high and 10-day low. So that's how volatile this 5-day move has been, which was a rejection of all these gains. That's a harsh sell-off. There's the 30-day low. That's the next thing in the target for tomorrow. So weakness abounding. Looking at daily charts of the last, so there's 5, 10, 30 days. There's your 30-day high. Here's your 30-day low. And that 5-day range is about 75% of the 30-day range. That's how volatile that 5-day move has been. That is a sharp stick in the eye. That's what that is. So here was today's gap down and closure right there. That's a weak bar after this nice gap up from here. A nice gap up, it's done nothing but crash. So if it breaks through the 10-day low, then the next target is back over here at the PSAR belly. So that's the next target to the downside. If that fails, so in other words, if that support fails, then it's going to get down to the 30-day low fast. If the 30-day low fails, look out below. How bad could that be? Well, it would already take us down to 370 from 410, which is already, that's a minus 10% correction right there if it gets to 370 tomorrow. So now we're going to look at the 150-day look back. That's 150. So here's 30, 60, 90, 120, 150. So here we are on that 10% sell-off from here to here. If that 10-day low breaks and this little support level breaks, then the 30-day low is here at 370. Then the next support levels are here at 365, and then the double bottom here at 356. And if that breaks, holy smokes. So this little move off the double bottom, there's leg 1, a slight pullback. There's leg 2, a slight pullback. And now we're right here. So you can see if this fails, then all of that is negated. But if this holds here, it's just a tactical play until it gets above this resistance level. So this is all just tentative optimism. This is abject failure and fear. So this is tipped towards the downside. The upside's possible, but that's going to be some heavy lifting. I want you to notice it didn't stay long here and here before it had strong moves. But it was in this block here for 20 days and could not really break out of that until it just broke down these last 2 days. That is not a sign of strength. Now, having said that, all of the guys who bought here and enjoyed that move, and all the guys that bought here and enjoyed that move, are starting to look at this and say, hey, that's what we like. We like to feel pain and suffering. We like to see the optimists get disappointed, discouraged, and panic, and then they sell us all their inventory down here, which is a price level which in the past has yielded some pretty nice moves. That's what makes this a trade and not a conviction. The ability to see that as a compound critical state that could support a move back up or a move down, and with only a small unit of risk, gives me 1, 2, 3 to the upside, 1, 2, 3 to the downside. This is a perfect compound critical state for a short-term trader. This is when a trader feels comfortable. This is the opposite of panic and fear. Check or hold. You got to have that mindset if you're going to be a trader in this market. All right, let's take a look at our indexes now. So the S&P was the big loser today at minus 1.6. There's tech, treasuries, and diamonds losing between 1 and 1.2. The Russell was off 0.75. Emerging markets were up 0.3. The only one of our 6 big indexes that made money. So this is a continuation of the globals doing better than the U.S. right now. So let's check all of the upsides. Again, S&P down 1.6. So there's commercial real estate, clean energy, S&P tech, blended commodities, lumber, only down 1.2. Then you have the FANGs, lithium, and finance down between 0.8 and 0.7. Then you have the next cluster here of Brazil, staples, materials, agriculture, Aussie dollar between 0.6 and 0.3. Here's the break-even line between winners and losers today. The winners, ARC Innovation, 0.12, Mexico, 0.12, the VIX, 0.3, Biotech, 0.3, Uranium, 0.67, ARC Genomics, 0.9, Wheat and Precious Metals, 1.4. Individual companies, marijuana, which has been brutalized the last week, is up 8.5. Now here's where it gets interesting. There's our metals. All of our metals are better than the S&P. There's Alcoa minus 1.27, and then U.S. Steel and Cliff both in the green. Now this is a time when, if we look back over the last 4 or 5 days, the market has been selling off like this. So the market has been losing, and the metals have been losing like that. But today, the market sold off a little further, and the metals were gaining. So that's an interesting turning point. So one of the things we like to see is the targets that are extremely weak compared to the S&P might continue to be weak, but that might also be a point of value where people are going to start playing them. So we like to find not only relative strength, but also relative weakness as a potential turning point in a critical state. And it turned out that metals were in that condition yesterday. And because they are very volatile compared to the broad market, you get nice trading opportunities like we just saw in U.S. Steel on the sniper trade of the day. Some other winners, Texas Instruments, Intel, in the semis. Both of them are better than the Qs and S&P Tech and better than the market. So that's good for those semiconductors. And I think and NVIDIA was the only exception to that rule. So NVIDIA is weak compared to the market and compared to its peer group. Taking a look at the downside, the S&P was among the worst, as you can see, minus 1.6. But oil exploration, the other lumber, consumer discretionary, oil, residential real estate, Ethereum, and Bitcoin now off 3.5. Tesla continues to get pummeled. Hey, there's a really good chance that Elon gets booted from the board. He keeps setting his Tesla money on fire because of his Twitter adventure. That makes for interesting reading. Still the most important company in the world. Squarespace and Rivian were worse. Coinbase was worse. Microsoft was bad. So to me, the story for tomorrow is metals, Tesla, a couple of the semiconductors. But I also kind of like this agriculture, materials, staples, and Brazil cluster. That's an alternate to the S&P that could be on the way up. And I think also it was energy was energy was kind of interesting. Marijuana is not, it's not a swing trade to me. It's not a swing trade. Oh, that's right, tomorrow, sir. When I say tomorrow, I mean Monday. Marijuana is interesting for Monday. Yeah, the 2 days of a weekend don't mean anything to me. It just is a place to do more work. If I'm being honest, when I say tomorrow, it's always for the next day's trade. All right, so that's the that's a quick look at the sectors. Let's take a look at the traders today. This little summary here of the Sniper Trading Executive Summary, that's worth a read. That's on Patreon for you to take a look at. All right, Agnieszka. Again, she's working the British pound and the dollar 5 minutes. She plays in a descending price channel. She gets the collapsing dragon for 0.7. She's out of the screen and therefore missed the SSC and the COTA 2. She comes back on the screen here, sees the like a double top, waits for it to break through the dragon, tries this one short. This could have actually been taken here at the PSAR, and then she makes that trade instead of fractional loss, but then she makes it up with the PSAR flip and gets paid quickly and brings home 1.6. Pretty good work. She's quick to cut the losers and is reasonable at capturing the winners. Welcome back to Woj, who's been on a little sabbatical. Always good to see you back on board. Here's Devon Energy. There's his OR3. He gets short, gets a little capture. He stopped trading this symbol here in order to concentrate on Tesla. There's the OR3. It rolls over. He gets this trade for 5R. Welcome back with 5.3R. Not too shabby. Satya has been in a good mood here. I don't want to jinx you. This is the OR3. There was the gap down. Here's the OR3 short. Exits for 0.8. Had 5 bars and it couldn't make a new low, so he takes it right at the edge of the dragon. He doesn't wait for it to come up and scratch, and now he's ready to take the SSC with a wrist box at the bottom of the dragon. Crushes that one. Started to roll over. He sees the crossing of the baby dragon. Takes 2.9. This one starts to fail. It doesn't go any further, so he cuts it quick. It starts to fail at the same level. It scratches. A collapsing dragons, and for 1.1. They all look the same leaving the river or the train leaving the station. And he keeps firing and brings him 4.3. So Well done. Those were the charts for today. Let's look at the reports now. We're back into bearish normal. Real weakness has crept back in. The risk Z has gone into risk off. It broke the zero line. So we could be in for another period of pain and suffering. ETF2 has already reduced its exposure to 0.5, a remarkably effective system. This is the regression line fractal framework that we look on the weekends. These are daily charts. So I want you to notice the big daddy of all this is the purple line. That is the RL270. This little move right here was enough to make the slope of the RL270 go from here to improve to there. This same, so that it does turn, but it is very slow to respond, but it gets there. Now this is the RL90 down. This failure, when that rolled over, told you this was coming. This move here was enough to make the slope of the 90, instead of continuing to here, to improve to there. So this was enough to start turning those long-term indicators. So we're mindful of that. Like it takes a move like this and a move like that. Both of those are reactions to the upside from all of this selling. And it takes these period, it takes a couple of those. It's finding support here and now here. That's what bottoming action can feel like. And you can see that when you get two of those, it's enough to actually start turning those indicators, which could indicate there's a bottom down here, that 360, 370. On the other hand, you'll just notice just how vulnerable, like this RL, now we're going to trace the RL 30, which is the black line. That is the health of the trend. And you can see how orderly that rascal is. That's why this is problematic, because that is setting up for like a kata 2. And if this does just continue to fail, you wouldn't be surprised if this came all the way down here to 330. That's why that is yikes. So this is now setting up the great test. Here's the RL30 rolling over. And here is the longer term RL90 still rolling up. That puts these two on a collision course. And now that's why this is a compound critical state. Is the 90 going to be enough to get this moving? We're past the election. Biden's got some victories in hand. Trump is imploding and looks like I don't think he's going to run because he can't even, the same sets of mindless robot followers aren't there for him. He's selling Pokemon trading cards with pictures of himself as a superhero in order to raise money. Not a serious person, my opinion. So is it going to do this because of the power of the 90 to turn and things are getting slightly better? Or is Russia going to drop a nuke and do this on the rest of the world? So that's what makes this one a very interesting week going into Christmas and the end of the year. Fireworks coming, boys. All right, let's go to the blended monthly rebalancing portfolios real quick to see what the sector performances have been. About on the ETF 13, about half and half are on a buy signal. But you'll notice the 1 week performance has been murdered. The only one that was not negative was Treasuries, which has had a pretty good week and a pretty good month. But boy, Latin America has been getting murdered. U.S. real estate, this is part of the housing market selling off, has just been getting murdered. A little residual strength here in the Euro-Asia blend and diamonds. But boy, even that's starting to weaken. ETF 22, it adds the XL series, like industrials, healthcare, staples. All of those got smashed. The energy sector, really the only one that, and this is an oscillator, so you can have a horrible month and a great week. That's why that's a swing trade and an opportunity trade and not a long-term position. Again, Treasuries beginning to stand out. And the defensive play of the utilities. ETF 32 takes that same portfolio, now adds a few more country sectors and things like silver, gold, China, agriculture and real estate, oil exploration. That looks like a trading opportunity to me, like a short-term bursts. But that's pretty slim pickings right now. In the Dow 30, there are a few standouts here. Boeing, Merck, Caterpillar. Honeywell is holding up pretty well. But there's some strength. Boeing and Merck. Procter's been holding up pretty well. The recent resurgence in energy is helping Chevron overcome this really negative. So that could be the beginning of a swing. Shift to the regional report. We've got 5 indexes on cash, 5 on a buy signal compared to their 4-month moving average, and that's why we are at 50-50 in that model. This is, the Russell mid-caps tech in the U.S. plus Latin America are all on cash, and now these are the other globals. Emerging markets, Euro-Asia, Asia less Japan, Japan, and the European 350. Bearish normal. And the globals are better than the S&P. The U.S. is showing weakness. Short-term trading is indicated still. Based on ATR percentage, we're looking at the most liquid and the greatest volatility for best short-term targets: energy, China, semiconductors and gold miners, Brazil, biotech, oil exploration. All of those in green are excellent short-term trading. Shifting to the daily. The Dow Tactical, you can see the story there. Real weakness creeping in. Tesla just getting brutalized. It's in free fall. Lots of 5DDs. JP Morgan, Travelers, Walgreens and Walgreens and Walmart both suffering. That's a tough market when even Walmart's suffering. Notice how far we have fallen from the 10-day high, so that the ETFs are giving us auto framers that are very favorable. And again, lots of failures on that 10-day and 30-day. Defensive plays like silver, gold are working, but a defensive play like real estate is not, because of the collapsing housing market. That's the next big stomach punch. Tons of auto framers, so many to choose from. That's the kind of market. Very few squeezes. This was a runaway day today. Not surprisingly, in the snipers, we're starting to see more Godzillas develop. And Tesla is an enraged Godzilla. I mean, pay attention to this setup, for crying out loud, Kenneth. That's telling you what it is. When Godzillas collapse, look out below. The one-day movers. These are the large one-day Z-scores. A handful worse than 2 sigma. I like the double greens as indication of confirmation of strong moves. And there's Tesla. Boy, it just doesn't get any worse than a 0, 0, 0 and wild volatility. Tesla, oy. Signs are there. Sniper auto framer stats for you. The tactical symbol set stats for you. Again, I like the double greens. Rivian, Tesla, marijuana. Dominated by the winter and fall over here. That's no surprise in the MACD 4 seasons. All right, that's everything we got for you today. We will be ready for this tomorrow. Now, here's an opportunity for you. Ken H., who has been doing all the heavy lifting for us for the last 18 months on his swing trades, is going to take a break. He's got some family things going on. So I'm going to take a look at the swing patterns on all of the tactical symbol sets tomorrow. But this is an opportunity for you if you are interested in swing trading. You've seen over the last 18 months how this weekly discipline has improved Ken H.'s swing trading proficiency. Absolutely essential to improving your skills is getting your charts posted. So, if you're in the sound of my voice and you're a swing trader and you want to get some coaching, post your charts in the chat room with swing frames, and I will review them. This is free check-in, and it's the single best thing that you can do to improve your technique. So we'll get after it tomorrow. Take good care.